Good afternoon, and thank you for joining today's webinar, Stop Using Excel for Your Budget. I'm Megan Turco, and I'll be your moderator today. Before we jump in, I'm going to briefly go over how to use your webinar console. The arrow on the right side of your screen will let you toggle the control tray open or closed, and at the bottom of that control tray, you'll see a chat window. Please feel free to submit your questions at any time throughout the webinar via the chat function, and we will get to the Q&A towards the end of the webinar. Additionally, on your GoToWebinar console, you should see an area for audio settings. If you're calling in through your telephone, please choose the Use Telephone option. And alternatively, if you're using your computer speakers, please select the Use Mic and Speakers option instead. I do want to note that today's webinar is being recorded. We will send out the slides as well as a link to the on-demand recording of the webinar within about 48 hours. So definitely keep an eye out for that email if you're interested in accessing today's webinar after today or sharing it with any colleagues who couldn't make it with us live. So with that, I would like to introduce today's presenters. We have John Dunnican, who is the partner for our CFO Advisory Services practice here at Armanino. John has over 30 years of financial executive, operations, and consulting experience in public and private companies, in technology manufacturing, publishing, banking, and more. He's held numerous high-level positions, including CFO, VP of FP&A, and controller, and has extensive experience in management, financial, and operations. We also have Brian Rogers with us today, who is a senior manager on our CFO Advisory Services team. Brian has over 25 years of financial executive, operations, and consulting experience in public and private companies as well. And Brian has held positions like principal and VP of finance and has many FP&A roles from multi-billion-dollar corporations and as a consultant and has acted as a consultant for multiple adaptive insights implementations. Thank you both for joining us today. And with that, I'm going to pass the presentation over to John.
Thank you, Megan. So I just want to spend a couple minutes kind of what we're going to be talking about today. So we're going to start talking about Excel-based planning methods and how we can improve that process by optimizing systems in the cloud, particularly adaptive planning. We're going to also go through some of the assumptions and drivers, some ways to do some what-if analysis, some of the big key areas of budgeting and forecasting, namely personnel, operating expenses, capital, and revenue. And talk about ways to make the system do a lot of the heavy lifting rather than an Excel spreadsheet. But before we start, I wanted to spend a minute talking about Armanino in case you don't know us, you haven't worked with us before, and kind of what our mission is. We do an annual survey of about 1,000 CFOs, VP finance, controllers, and similar type positions. One of the things that is consistently come out of that survey is one of the questions we ask is always how the accounting finance organizations spend their time. And on the left side of this graphic, you can see how that time is allocated by the departments, kind of what the average is, with about 25% of the time being spent in business leadership role, which includes budgeting, forecasting, setting business direction, working with the C-suite executives, those types of activities. 20% of what we call a protector role, which deals with, if you're a public company, it's Sarbanes-Oxley, but even for private companies, it's really making sure you've got appropriate controls in place, maybe internal audit, to essentially make sure that there are no surprises, no assets are lost, and the company and the financial statements are properly stated. 55% of the time is spent in really kind of what we call the accountant role, which is the basic blocking and tackling of an accounting organization. It's doing the account reconciliations, it's putting together the basic books, basic financial statements, it's posting journal entries. It's really kind of the ticket to play, as it were, the things you just have to do as part of an accounting organization to get the financial statements correct. On the right side, you can see the answer when we ask organizations how they would like to be spending their time, and not terribly surprisingly, it really flips on its head. With organizations wanting to spend a lot more time in kind of the business leadership role, really enabling the company to move forward. And again, things like budgeting, forecasting, working with the C-suite executives to set new products, new markets, really help drive the business forward. The amount of time spent in kind of the controls doesn't really change. People seem to think that's about right. And the accountant role is where the time really goes down. Finance organizations want to spend a lot less time on kind of the real basic blocking and tackling. Not a lot of value add, but the things that just have to get done. And at Armanino, our mission is really to help companies achieve that change by really kind of looking at the people, processes, and technologies companies use, how we can streamline those to really let organizations, finance organizations, particularly focus on leadership roles and moving forward. And that's really kind of our mission. One of the key things about that is, as I say, is technology and adaptive planning to enable to streamline that process. The process of budgeting and forecasting financial reporting is a big component of that, and that's really where we're going to focus today.
And now we'll actually launch our first poll for today. So in just a moment here, you'll see it up on your screen, and then we'll give everyone a few moments to actually get their answers in. So our first question is, how effective is your personnel planning as an aid to making better decisions? And if you can answer sort of on a scale, if you will, to not effective, it's error prone, time consuming to utilize, it's functional but not effective, it's not really collaborative, satisfies the minimum requirements but it could be much better, it's very good, only minor improvements needed, or no changes needed, you're very satisfied with your current process. So we'll give everyone a few moments here to get their answers in. It looks like we've got about 30% voted so far. And just a reminder of course, you know, it's always helpful for our presenters, John and Brian, if they can get some of your feedback so they can target the rest of their presentation sort of accordingly. So we'll go ahead and close the poll in 3, 2, 1, and I will pass it over to John to talk about the answers.
Thanks, Megan. Yeah, not very surprising. I appreciate the information. It's always good to kind of know where the group is at. Kind of breaks into two simple answers. I guess for most of you, it's kind of doing the minimum you need to do, but we're looking for ways to improve it. And for some of you, it's not very effective at all. So that's good to know. Hopefully today, at the end of this, we'll give you some ideas on ways you can really kind of push that to a higher level so that eventually you can get up to level E there with no changes needed.
Very good. Well, thanks for joining, everybody. Brian here. So yeah, that survey results is typically what we see, and we'll give you some examples on the next slide in Excel, but typically we do see companies doing Excel spreadsheet based. It's really owned by finance and accounting, and it's very, very hard to share that with the rest of your management team. Update cell references, different versions are really hard to manage, difficult to make changes, see impacts quickly, and really collaborating, like I mentioned, you know, sharing that with your team, having multiple people in the spreadsheet, there's security issues, calculation integrity. So there's a lot of good reasons why you want to move away from Excel. Next. So when we look at what typically is done in Excel by most of the clients that we see, you know, they've got a spreadsheet, they've got their department, maybe they've got a tab per department with their employee name, their position titles, but they've got salaries and dates for either start date, end date, merit increases, that kind of thing. And all these calculations are done, you know, really in a given sheet, but those same calculations need to be copied for every single department. And each department leader, manager gets in there, makes changes to their staffing, and quite frankly, it's a long process. You send out a bunch of files, you aggregate them back together, you notice there's lots of errors, and then quick changes on the fly to what you've already done becomes a real problem. So what we want to do is move to an example of what that might look like in our solution. So I'll take control here. So first thing, when we look at personnel planning, the first thing that we like to do is build assumptions and drivers that really give you a basis. Things that everybody's going to share throughout the organization. Well, there should be a sheet in a model and a solution where you say, look, We've got standard raises. They're going to happen on April. We've got commission assumptions, bonus payouts. We've got pension percentages, recruiting fees, days in the week, hours per shift. Whatever metric you have for your business that's going to be globally based, you're going to want to set up an assumption page. And this is one of many assumptions pages that we'll be talking about today. But when you move into personnel, what's great about a solution like this is what we would do is load in your entire organizational structure. And everybody that has access to a solution in the personnel page like this might only see their version of that. So instead of having a workbook and you have to hide a bunch of stuff, in a solution like this, if I'm the Sales North manager, I jump into this sheet. Well, my staff is all I can see. I can't see south or east or west or any other part of the organization. So when we're building your plan and you really begin the whole plan process, what's done is your entire staffing roster is loaded into this model sheet. We'll have your name. We might have a drop-down for your position in the organization. Your state of residence or location could be factors that are loaded into your model. But what's very powerful about the model is we've got start and end dates where all of your employee-related calculations, salaries, benefits, 401k, pension, everything is calculated relative to dates that have been input into the model. We've got assumptions on hours per week, your benefit plans, and a very streamlined, logical setup where, hey, Plan 1 represents health benefits for employee only. Maybe that's $400 a month. Plan 2 is with spouse. Maybe that's $800. Plan 3, maybe $1,200. Whatever the numbers are, we could have lookup tables that are automatically referenced in this kind of a sheet. So we can go through, have all this data in here, raise dates, maybe pay rate per year, per hour, commission targets. We can split all that information up into different areas if you need to allocate an individual. In this case, William Clark. He's in the Sales North region, but he's spending his time also in Canada and the UK. So in this area, we're able to actually give a different split of where this person's hours go to. And as you're looking at any individual in a sheet like this, you can certainly click on their sheet, or click on their row, I should say, click on row details, and then you're able to pull up a sheet like this that gives you all of the personnel-related calculations. Here's the salary, here's the head count. If there's benefits being calculated, that would happen in here as well. Okay. So it's a very streamlined way to plan your staffing. It's particular to your managers and your organization, and it's also particular to your version. So as we go through this, keep in mind you can have an unlimited number of versions in here. So having a plan with your current staffing and assumptions, well, that's all relative to a particular version. Much like in Excel, we can go into a solution like this, do a save as, change the name, update for a few months of actuals, and create some new assumptions. Let's say I've updated my plan and now I want to add a head count. I can simply hit the plus key right here, type in that person's name, click on their position, their start date, maybe that's 6 months from now. You know, maybe they start in December as an example, hours per week. Basically fill all this stuff out, and as I'll show you in the next demonstration, all of these employee-related calculations then feed into the appropriate GL accounts and happen automatically. So your managers are manipulating their staffing sheet, not a spreadsheet of dollars by account. John, you have anything to add on the personnel?
No, I think that the key thing here is that, of course, you can plan. Every model can be different. These are the ones we've set up. These particular attributes we want to track, like state of residence, comment, start, end dates, types of things. You can select those or others. You can add additional items if you want to, if you have other types of benefits, taxes you want to track. Or maybe you don't want to track that at all. Maybe you just want to put a 20% overhead on salary and be done with it. So there's a tremendous amount of flexibility how you want to work with the personnel model. So it's very nice because it's very flexible and give you a lot of opportunity depending on how you want to work. And of course, I guess Brian, if you just want to show kind of what it looks like from the very top, if you're the system administrator or the the FP&A manager, controller, CFO, depending on whatever your organization is, that person, of course, because they get the total company, can see everything. So you always have that option as well. So when you're managing the entire company, you can see everything from the top as well. You can see here William Clark and his department. So you can see both views are available to you, which gives you, again, gives you a lot of flexibility and really very powerful planning tool.
Very good. So that wrapped up personnel planning. Megan, I think I'm back to you.
Thanks, Brian. So our next section is around operating expense planning, and we're going to start with another poll question for you guys. So it should pop up on your screen here, and it's very similar to the last one. How effective is your operating expense planning on a scale of 1 to 5, of course 1 being the lowest? Similar answers as the first one, it's not effective, it's error-prone and cumbersome, all the way up to you love it, you don't need any changes, you're very satisfied with your current expense planning. So we'll give everyone a moment here to get their votes in. Thank you to everyone already submitting them. We're already at about 60%, so we're pretty close there. And if you have already answered the poll, now would be a great time to submit a question for our Q&A session that will happen at the end of the webinar as well. So we'll go ahead and close the poll in 3, 2, and 1. And back to you, John, to talk about the answers.
Pretty similar results to the last one. It looks like we're all kind of sitting in the 2s and 3s levels. Although a little more to it in this one, as opposed to the personnel planning, which actually is a little different than we usually see. We usually see the personnel planning being a little bit more troublesome than the operating expenses, but that's okay. Clearly we're seeing a lot of opportunity for folks to improve on what they're doing. So thanks again for responding, and just we can kind of work from there. Brian?
Excellent. Very good. Yeah, so what we see a lot, and I've seen throughout my career just being in that role, is too much time being spent on accounts that aren't significant, and you've also got similar accounts in similar areas that are planned completely different. So you want to standardize and have some controls and assumptions, and really, again, take advantage of drivers and assumptions to really be built into your model, but do the heavy lifting. Make it so that units of headcount and other things, business drivers, are driving your known expenses that happen because of activity, and not relying on managers to independently come up with a method that might work or might not, and then you're looking at the detail, once it's rolled all together, and it doesn't make a lot of sense. You want to standardize it as much as possible. And I think we're ready for the next demonstration here. Okay. So when you move to operating expenses, what I'm doing here is, I'm in the solution. I'm showing all the sheets. Typically, you're going to see, income statement, balance sheet, cash flow, some key metrics of your business. But I'm going to move into the expense sheet. I'm going to go back as though I'm the sales manager. So if I'm the sales manager of Sales North here, this might be my view of the application of my operating expenses. And you'll notice right away a couple things stand out. One is you've got some numbers in green, and you've got some numbers in black. The green are the actuals, and what we recommend is, you bring in your whole chart of accounts into this solution. You have an integrated setup to bring in your historical trial balance data by department, by org level, and those, I've created this first quarter update which said, hey, I want to have this dynamic connection to actuals, but I'm going to have actuals through March, and I'm going to have my plan from April forward. And when I look at April and I'm in my plan period, I can easily then go into my drill through button, see that my salary number is coming from that personnel salary a model sheet I just went over, and then I can see where those people are. So I've got Sean and Florence and Valerie and a couple new hires and Bill Clark, contributing to that salary amount. So it's got a very effective way to drill into any account, see what's behind it. You can see these little purple triangles. Well, that's giving me a heads up that, hey, there's a formula there and it's coming from somewhere else. You'll also notice that these are shaded cells. So they're read-only. I can see them, but I can't change them if I'm the user. White cells are where I can make an input. In this case, I've got a new training program. Maybe I'm planning for the year. Maybe I want to type in a number for the rest of the year, and I want to break that back evenly. I'm going to apply that to, in this case, I'm doing a 3 plus 9 forecast. So for the remaining 9 months of the year, it's going to spread that amount, and I'm going to hit save. And my data's in there. So you make it very easy for your managers to input numbers into white cells. They want to add a note to something that happened maybe in an actual period, they can do that. If they want to actually make it driver-based on some of these, which, like we've been talking about, I'm going to look at telephone expenses. Well, telephone expenses, I could change the number if I want to. It's a white cell. But if I want to just go with what the model's telling me, well, it's taking my head count times an assumption we've created on telephone cost per head. So if I drill into that number, I can see I've got $40 as my cost per head, and I've got my head count number there, and I can again drill into that, and I can see who's making up that full-time equivalent head count. If you have other needs in the model, you might want to bring in things like transactions to get a better handle on things that have happened. So in this case, I'm looking at my airfare expense. Maybe I want to know, well, what's the invoice activity that equated for that airfare of the month? Well, I can hit my drill into transactions button for that particular account and pull this up and see the 6 invoices for the month of March equating to that 1855 number. And this is coming directly from the ERP system. So it gives you a little bit of an example, of how this is going to work. So you're going to have great areas that they cannot access, but they can see. You're going to have formulas that, again, are very intuitive. We might be referencing another part of the model. We might be referencing, I'll talk about capital in a minute, but this is where, hey, maybe Sales North bought a laptop and they've got depreciation expenses from the capital model flowing into this expense sheet. So what we want to do is create a fully integrated set of financials that are fed from other sheets. John, you have any other comments on expense planning here?
Sure. If you think about what you're doing currently in Excel and how you'd run the budget for each of the various departments. So if this was an Excel model, you could do something a little bit similar in terms of the numbers. But you've got an Excel file that's distributed across all these different departments. Sales North, in this case, would have their own Excel file. Then you would have to kind of recombine all of these files for all these different departments to come up with a consolidated budget. What we've done here, as Brian showed, is as soon as you make the change, those changes flow all the way through the model. So you've eliminated that entire process around emailing out files, getting those files back, reconsolidating those files, and then analyzing the numbers. When we talked at the beginning about trying to eliminate those accountant role, kind of the blocking and tackling kind of things, accounting finance organizations spend a tremendous amount of time just kind of doing things like consolidating numbers. By using Adaptive, you can make that process virtually instantaneous. As soon as the department manager puts something in, or budget manager, those numbers are rolled all the way up, and you can immediately see that at corporate without the need to email out files and things. And you can see that impact. You can look at that impact. You can look at who made those changes, and it really just makes the process, allows you to focus on what's happening, not consolidating spreadsheets. It really kind of helps you become an analyst and work with management to really understand what's happening and explain to senior management what's happening, why things are changing, as opposed to spending time worrying about whether the Excel files are adding up properly. You can see in the audit trail here. Yeah, go ahead, Brian.
Yeah. Yeah, an example, I just typed in $50,000 in the Sales North area. I hit save. The numbers went from blue to black. Black means they've saved, but they're immediately available at every roll-up level. I pulled up the total company or the U.S. view, and I can drill into that and find that Sales North $50,000 number that I did. And if you want, and again, if you're more maybe in the admin area and you're looking at a sheet like this, and you want to see, maybe you want to see salaries and wages by level. Well, you can do a right click on your mouse, do a view by level, and you'll notice I'm going to have my account goes up on the upper right, and my organization is now in each row. So it's got a very clean pivoting function that helps you analyze, what's going on and how these numbers will look by individual level. And you'll notice I've got numbers in here for Canada and UK, what have you. We see our clients putting their data in at the native currency level and then having the currency exchange rates in here. And then when it rolls up to, say, the U.S. maybe be the parent, then it would roll up and convert to USD automatically in the model. Okay.
Thanks, Brian. So we'll go on to our go on to our next polling question. We've got a bit of a theme with these questions. So this one is around capital planning. And again, how effective is your capital planning process on a scale of 1 to 5? Still 1 being the lowest at not effective and 5 being the best. No changes. You're very satisfied. So we'll see if we get a similar response to our last 2 polls here. We've got about 40%, 50% of you voted so far. So we'll give everyone a few more moments here. And thank you to those of you who are already submitting questions for the Q&A session at the end. I know some of those might end up being answered in our capital planning and our revenue planning sections here, but I do appreciate those coming in already. So we'll go ahead and close the poll in 3, 2, 1, and I'll pass it back to you, John.
Thank you. Well, this is good because we actually some people now are actually like the way they're doing their capital planning. So that's good. So I guess they're focused more on the other areas, but at least some folks' capital planning is being very well handled right now. And the few more bigger percentages now looking at it is not very effective or collaborative. So, well, getting a little wider split here in the in how capital planning is being done. Few less people are happy, and a couple people are actually very happy. So that's for those that are very happy, that's great. Kind of congratulations, I guess. Brian?
Exactly. Yeah. So yeah, I mean, much like with personnel planning, we'll see. You might have a capital planning process that works. You understand it. The numbers, you can generate okay, but it's not collaborative. People don't. You don't have different managers with different areas of the company being able to interact and see the impacts of what they're doing and really providing their input and insight, into not just what's coming, but these things that are pending or future projects. I mean, I think it's really important as you complete a budget to be able to say, well, here's what we've submitted, but in this other version, we want to know what the scenario is if we open this new facility, or we buy this equipment, or we create a new production line, or we have a bunch of new hires and need to have laptops and office furniture set up for them. What would that do to our financials? You need to be flexible with that kind of decision making within your capital planning process. And with that, I think I will jump back into the model here. So moving to, I don't think I'm sharing my screen, there we go. So moving to capital planning, I'm going to go back to my Sales North example. So again, if I'm an administrator and I've got access to everything, I could see the entire company's capital plan. But in this case, I'm just showing you, these are the only items that I've got responsibility for as a Sales North manager. What we've done here in the capital model is we've got a free-form text field to put labels for your items. We might have your asset classes loaded as a dimension in the model, and what that allows us to do is to tag, laptops, furniture, equipment, hardware, software, leasehold improvements, tag all those data elements with a depreciation or amortization schedule, and have that built into the model. So we're not recreating the calculations to spread, laptop depreciation over 36 months every time somebody buys something. That's just ingrained in the model by the user selecting laptops. And let's say I wanted to add a new laptop, I'd simply hit this plus sign, add the row, type in the label. Maybe I'd have a drop-down list to select priority levels. But what we found pretty good with our clients in setting up and really making things efficient is having everybody load into their capital model really a wish list of all capital items that are under consideration. But when it comes to the plan and what's approved and what runs through, the balance sheet, the income statement, the depreciation expense, everything, well, it's only going to be those items that are approved. And you might update this first quarter, update version and say, you know what, we had a big project that was pending. Well, that project is now approved. I'm going to change that status. I'm going to hit save. And now that project immediately is filtered through all of the, corresponding financial information. It's linked to your balance sheet, so you know that your fixed assets have changed. Your accumulated depreciation amortization has adjusted accordingly, and you've built your depreciation expense. So let's say that I go back to my overall company example here, and you can tell, whoops, clicking around a little bit here. If I move over a little bit, you'll see you've got all kinds of numbers out here. But in this case, in April 2015, I've got $2,500. What's happened here is we've linked this capital model to your personnel model. So in Services East, we're going to actually have a new hire that begins in April of 2014. The formula has picked up that indication. We've got, this is approved, so it's going to grab the headcount multiplied times the cost of the laptop and put it in here, and that immediately is impacted by your depreciation amortization schedules and filtered back into your balance sheet and your income statement appropriately. But this is a great example of, the model's doing the work for you. All you needed to do was say, hey, I'm going to add a new person in this month in that personnel model, and it's already going to do the lifting, heavy lifting in the capital model for you. John, you have any comments to add there?
No, I think you covered it very well. It's just the ability to have the approved, pending, rejected. As you said, a lot of clients find that extremely useful because it's capital is one of those things that often when you're doing the budget or when you're doing updated forecasts, there's a lot of questions to how much funding we have, how much money we have, how we're going to handle it, and it's always good to be able to track those items. People like to be able to do this. So that's a very, very nice feature we can build in. You can see that at the corporate level. You can run reports of all the approved items or all the rejected items, everything, or more importantly, some of everything that's pending. So if you're planning your capital for the rest of the year, you can get an idea of how much money is still out there from a wish list point of view. So it's very, 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 very helpful and gives you a tremendous amount of flexibility.
Yep, very good. All right, Megan, I think we're back to you.
Thank you. And we'll go ahead and get our fourth and final polling question up on the screen here. So how effective is your current process for revenue planning on a scale of 1 to 5? So we'll see, maybe this one will have that span just even a little bit greater, John. And of course, if you haven't had a chance to submit your questions for the Q&A at the end of the webinar, now is a great time to do it so that you're not having to distract yourself through Brian's next demo. We have just about 75% voted in here, so we will go ahead and give everyone a moment, and we'll close it in 3, 2, 1. And thank you for everyone who participated in our polls today. I'll pass it back to John.
Okay. Yes, the results are definitely improving. We have a lot more people that are feeling pretty good about their revenue forecast, or very, very good about their revenue forecast. And yeah, still some people are really, really not comfortable with it at all. In some ways, not very surprising. Companies do tend to focus a lot on revenue because it drives so much and it's so critical. So yeah, so it's good to see that 40, 50% of the folks are pretty happy with the way they're doing revenue. So, but I think we can probably still maybe give you some ideas on how you might be able to make it even better. So, Brian?
Exactly. Yeah, exactly. So what, oftentimes we see, pivot tables in Excel. They can be very powerful and helpful, no doubt about it. I've used plenty of them myself. But what again kind of keeps coming up is this whole collaboration. If finance is really the only one that, and maybe marketing or sales is really the only one that owns the top line forecast, the revenue forecast, then you're going to have trouble getting buy-in. You want to get your managers, your leaders to really be a part of the process and inputting it. And it's what's difficult too is not maybe the plan itself isn't that tough, but how easy is it to update, to do a rolling forecast, a quarterly update, to change things on the fly. I mean, I remember when I was doing it, the very frustrating thing, especially with revenue forecasting, is if you need to make a last-minute change, that's very difficult to do with a full integrity of your P&L and your balance sheet and your income statement and everything else. You can easily make the change for revenue, but obviously there's downstream effects on everything else. How many people you're going to need, what your capital requirements are going to be, how many offices you need. If you haven't linked all of those calculations through your model and you're making a rather significant change on revenue, you might have a problem. So anyway, I want to show you in the model how that looks. Okay. So the pivot table idea is pretty good, and we're not necessarily thinking it's a bad idea. And Adaptive kind of has their own version of a pivot table. But this is, I think, a whole lot more powerful. This is called the cube sheet. So in Adaptive, we've still got all of your department level, all your organizational levels. And again, this could be by country at the native currency level being planned, Canada, UK, US, and so on. Perhaps you have all of your products and customers in a sheet like this, which you can very easily toggle between, okay, I'm planning product A versus A1, A2, A3, and I want to do it, by particular customer. But I can go in again, let's say that I'm the Sales North manager. I'm looking at, again, a sheet like this. It's been updated with actuals, so I can easily see, hey, what are the units that have been sold for actuals through March? What's my projection for the rest of the year? What is the price and the discounted price, the gross revenue? But you might go all the way through some standard cost assumptions, some variable cost, and get into a whole, not just revenue, but gross margin by product, by customer, and really cut this up in a number of different ways. And, and this is a whole lot more collaborative than Excel, because this is web-based. So anywhere you are with your team, and you could be, in a hotel on your laptop with internet access, you're jumping in, you're able to see these results, looking at actuals, looking at metrics, adjusting your forecast accordingly. But you can have a sheet like this set up where, again, you've got read-only areas in the shaded and you've got places where you want input, in the white. So let's say that I'm generally okay with the monthly split on something like units for customer 2, product A1, but we just got an order and it's going to be significant in the month of April. Well, I want to change that number. It's blue. I'm going to save it and make it black. And just like that, now I've loaded that into the system and it's affected everything. So if I go back to my income statement, my P&L, and I look at my revenue for product A, I'm going to go right into here. I'm going to drill into that level, and I'm going to drill further into the cube sheet where this came from in the product A1, and I can see where this number is coming from. So it's immediately connected to your GL accounts, and you can trace that number back to wherever it resided from in this cube sheet. And again, if there's been a change, you've made it, you've locked down your plan, you've turned on your audit trail, you can say, look, we just submitted this, but I noticed that, something changed. Maybe you didn't lock it down in time for something else, or maybe you were doing a rolling forecast, something changed. Well, you can easily pull up your audit trail and figure out, well, who's been in here, what did they change? So there's a very easy way to do that in the solution. John, any comments on the cube sheet?
No, I think that the revenue in most models is probably, and for most companies, is probably the most dynamic of anything in the budget and forecast. That's the item that's always changing. As you say, you always, one big order, one big new order getting hopefully received or unfortunately sometimes canceled. It can really kind of throw a monkey wrench in your forecast. So, the ability to be very, very flexible to do that is extremely useful. And I think actually we actually have a question that came in on the revenue. So why don't we touch on that real quickly, here, Brian?
Yeah, we did actually. So is it safe to assume that Adaptive would allow formulas to incorporate things like estimated quota attainment, quota goals, number of sales reps in various stages, et cetera, that type of thing to predict the bookings number that would flow into revenue and then be recognized over the subscription period?
Yes, exactly. And actually, there's another model that
that's a bit of a mouthful, yeah.
It was a long one. Lots of examples in there.
Yeah. So I think the thing to keep in mind with Adaptive is we can have all kinds of different sheets. You were looking at a cube sheet that helped you do product planning. That's all those accounts and calculations are really independent and mutually exclusive from all your GL accounts. So we can make any adjustments, any calculation, and then have that resulting final calculation, the book number, feed into your revenue amount. And this is an example of, let's say that you have service contracts, and maybe you've got a revenue recognition methodology over certain periods of time, and this could be anything that we've loaded in here, upfront 2 months, 6 months. Maybe you're invoicing it on a different pattern for, you're going to look at your cash flow. So you could set up other models like this, particular to customers and products, where you're forecasting, what's going to happen here, and then you can have the resulting, calculations then feed back into your model. But all the items you mentioned on the sales quota, formulas based on that, we've done all that in these models. You can have all kinds of fancy, if-then statements if you need to. If it gets to this, volume level, then it's maybe an extra different commission for the sales rep, and if it reaches this threshold, it's another, different percent. All kinds of things like that, attaining quota and maxing out numbers and that kind of thing. We've done that in the model.
Yeah, the unfortunately for the person asking the question, our demo model doesn't have anything by rep in the demo model, but yeah, we absolutely can do that. We have done that for a lot of customers where we're actually looking at things by sales rep, and we have whether it's goals by sales rep, sales, actually actual transactions by sales reps, units sold by sales reps, dollars by sales reps, those types of things. Unfortunately, this model doesn't have that, so we can't quickly demo it. But yeah, we absolutely can do that, and we do that fairly frequently. Another question, Brian, kind of related to revenue in particular, but to some degree expenses as well that came in. And, it's great that obviously we can link this through the P&L. But what about the impact on the cash flow forecast? For a lot of the companies that we deal with, often cash is king, and
Yep.
orders can impact cash fairly substantially. So why don't you take a moment and kind of address that's a question people are
Sure.
curious about.
Sure. So when a model, the solution is set up in Adaptive, we're building not just an income statement, but a balance sheet and a cash flow. Cash flow. This is an example of your indirect cash flow. So you've got really the difference of your balance sheet items, but this is all formulaically put together. So the net income comes right over from the income statement. We've got calculations from the balance sheet saying, hey, take the current and previous periods, give me the difference in accounts receivable, doubtful accounts, all the different items, accounts payable, deferred revenue, and this is going to tie back, and we're going to have areas in the model that make it tie to your cash flow that's on your balance sheet. So this is one way to do cash flow. We can also do the direct method, which is going to be more of a to sources and uses. Maybe you're going to have supporting schedules, and you're going to factor in timing of of your revenue receipt and your payables, that kind of thing. But you might have sources of cash by customer in this example, uses of your expenses, payroll, taxes, benefits, and so on. And then again, tying to cash flow, tying to the cash balance on the balance sheet. And the balance sheet, is also going to be a fluid part of the model. Again, updated with your trial balance data, but very fluid with your forecast. So you're going to have assumptions on day sales outstanding to help you calculate accounts receivable, percent of accounts receivable perhaps on the doubtful, build your inventory. You're going to take your previous historical balance on fixed assets, but it's going to hit your capital sheet and add in any capital purchases. And much like with depreciation, is going to take your previous period, add in any new depreciation on new items purchased. But it's going to be a fluid, connected model. Retained earnings are going to flow over. Net income is going to come from the balance sheet. So, once you're set up, this isn't something that's got a lot of manipulation, and you're gonna go to your, to an assumption page, and really do your, tweaking of assumptions on a sheet like this, where maybe you're going to change your inflation, your day sales outstanding, days payable outstanding, that kind of thing. And this is really where you want to integrate. So, like what John was saying at the beginning, you want the model to do the heavy lifting and be able to tweak assumptions and drivers. You don't want to replicate calculations all the time. So, but a balance sheet is something that will flow out, and of course the cash flow, and if necessary, supporting schedules to get a direct cash flow. That's something that would be included in a full model.
Yeah, that direct cash flow is really kind of key, because that's really how people, particularly with smaller companies, startup companies, really kind of think about their business. The indirect is kind of the nice gap model that you see in the financial statements.
Yep.
But that direct is really kind of where people tend to live day to day. So that's really kind of a key item to be able to do that. I think Megan has another question for you, going back actually, I think, to the personnel sheet here.
Yeah, one of our audience wanted to know, can I do personnel planning by employee type rather than by name?
Sure. Yeah. It'd be the same thing. I mean, this could be the type, or you could just say, look, or maybe you don't even obviously need a name or a text field here, but you could simply just start planning by position or code or salary grade, or like we used to have. I had a model with the call centers. We had sales reps, and the turnover was rather significant. Well, we just put in, hey, I know I'm going to need X number of sales reps per calls coming into the call center. Well, we could build that logic in, and you're just going to have a head count that's created based on volume and filtered through a model like this.
Okay.
So yeah, whether it's by position or by category, very flexible.
Yeah, that's good, because when you got, I mean, the by person is critical, but yeah, if you have, for those organizations that have, large kind of pools of employees, being able to do that gives you some extra flexibility, which is nice. Um,
Yep.
another question another question has come up is, well, you've talked quite a bit about the assumptions. Why don't you talk a little bit about questions come about, can units have their own assumptions, or can business units, subsidiaries have their own assumptions, or do they need to be universal? Kind of what the flexibility is there.
Yeah, so that's a great question. So, this is a good example of that. So let's look at personnel. So, I might have a diverse, organization spread across many different companies, and this could be really anything in the organization. But in this case, I've got personnel assumptions, but they're all specific to countries. So I've got United States version. Whoops. I've got a United States version. I've got a Canadian version. I've got a UK version. But anytime I've got a sheet like this, I can have global assumptions. They apply to everybody, but I can also have assumptions that are based on my org level. And we help you determine what org levels does that apply to, but that would apply to any given one that you have in the model. So it's very flexible.
Okay. We're almost out of time, but one of the kind of last questions that has come in is, you talked a little bit about the different, the number of different versions of the budget and forecast you can have. Can you create special forecast budgets for kind of unique activities, things like mergers and acquisitions and those types of activities where you need to do something a little outside of the normal budget cycle, and things we want to do some special work?
Yeah, definitely, and that's a great question, because that's something that I was a client. I did quite a bit. I was a client during the 2008 market crash, and what I needed to do, and I'll just get into a sheet here. What I needed to do was take an existing model, connect it to everything that we had, but I needed to not only lock it down, but I needed to hide it. So only I could see what I was doing, and we were looking at all kinds of things. We were going to divest something. The year before that, we were actually looking to acquire different companies, but there was all kinds of major company activities that were going on that we certainly didn't want everybody to be able to see. So you have the ability in this solution to hide versions, to lock them down, and and to make them unavailable. So if a version's hidden, and let's say I'm doing an acquisition, I don't want anybody else to know, I would have that version hidden, and when they log into the solution, they wouldn't see that version even as a selection. They wouldn't even know it existed.
Yeah, and that's important, because you don't necessarily want people to even know you're thinking about those things.
Yeah. But you can see on here, these are locked, and I could show you real quickly. I know we're running out of time here. But when you're in a solution like this, you can be here and pull this down a little bit. Here's all my different scenarios. I'm going to actually reduce this a little bit so you can see what I'm doing here. But you can have, these areas here hidden, locked, and I can say, hey, admins maybe aren't hidden. The regular user group is hidden. Maybe they have access. Maybe it's locked, but they can add notes. So you're very flexible. And then you determine, what's the length of the time of a given version, and when does it start in the plan mode. In this case, I've got, my new plan begins January of 2014, so I'm going to have actuals through December of 2013 automatically. So very easy to do that. And again, much like I showed you on some other screens, if I create a new version, it's as simple as hitting the plus sign, typing a new name, and hitting save.
Okay. Thank you, Brian.
Sure.
So, Brian, we're actually going to pass it back to our slides here, and then we'll let you go through the summary of the key points for today, and we'll wrap everything up after that.
Sounds good. Yeah, so you've kind of seen, you've seen personnel, operating expenses, capital, the revenue, taking a little bit of look at, how that comes together, how to use drivers and budgets. But I think we're kind of drilling in the point, let the solution do the work for you. Excel can do a lot, and it's good, but let it be a very intuitive process. It's easy to find these assumptions. But most importantly, really, that second point is collaborate. I mean, I think the more you can actively get your team members involved in your process, it's going to have greater buy-in to that plan. The last thing you want to do is a ton of great work in your accounting finance team, get done with your plan, and then have the majority of the other management team members say, hey, I don't know, this was finance's plan, I didn't do it. You want them to have ownership and accountability to that plan. But you want them to be, if they're interacting with this plan, you want them to, hey, don't spend a lot of their time, don't waste their time, make everybody more efficient, focus on what matters, create a way to really create a better conversation, build and create a way to make better business decisions, not just create a planning exercise that, might become obsolete in another month or two. You want to create a decision support tool is really what you want to do, and build confidence that you've got the right numbers and that you've looked at them a number of different ways, and that maybe the plan that you're submitting to the board has been really tested with assumptions and actual performance, and how you've looked at it many different ways. You feel confident when you're done, and that's really the whole point.
Yeah, and I think that really kind of helps, kind of what we talked about at the beginning, help the financial organization move from being seen as, kind of the bean counters to really kind of being key members of management and really kind of helping drive the business. So good. Thank you.
Yeah. Very good.
Well, thank you, Brian and John, and to our audience for all of those great questions that you submitted. That does wrap up today's webinar. If you have any specific questions that we didn't get to today, definitely feel free to contact John or Brian directly. Their contact info is up on the screen, but as I mentioned earlier, the webinar was recorded today, and we will be sending out both the slides and the recording in the next few days here. So you'll be able to have that for reference. You don't have to worry about copying it down right now. As you do exit the webinar today, there will be a quick survey, so definitely take a moment to let us know how the webinar was today. We love to be able to continue bringing you educational content in the form of these webinars. And that'll be it for today. Have a great afternoon.
Thanks very much.
Very good. Thanks.